Those who are prepared for the coming crisis watch as the dominoes fall. Those who are not prepared will be washed away in the tidal wave of chaos and madness. Today we will discuss the global economy taking a nosedive. You came here for the truth, so let me unveil that for you. Let's get into this today. I want to make a quick video for you, and we're going to begin with this cartoon. It says it all. You have the road economic recovery. Seems like it's almost there. But while the speed limit is 65, their speed is unfortunately 0. And if you look into the actual statistics, you can find that the speed limit that these individuals are going is actually in the negative. And that's the truth. It is a cartoon, but it does show you what's really going on. So let's begin with the actual information here as we look into China. China obviously very hot in the news, and we'll begin with this out of the AFP. China to stabilize the stock market for a number of years. So their program here is, of course, just like any other government around the world, to maintain asset prices. China's market regulator on Friday vowed to stabilize the volatile stock market. What they plan on doing is no different than what many others have publicly stated. For a number of years to come, the China Securities Finance Corp will not exit the market. Its function to stabilize the market will not change. And that is according to the China Securities Regulatory Commission. And of course, they say this specifically because they want people to be assured that everything is going to stay status quo, business as usual. Don't worry, don't panic, keep your money in the system. This is exactly what's happening with the Fed, with the plunge protection team. We have seen Japan do the exact same thing. We have seen Switzerland do the exact same thing. Here is China just falling in line. They're all doing it, might as well get in line. Now we know a lot of things from China. There's a lot of counterfeits, of course, and this is the latest counterfeit. One of the world's largest banks became the latest victim of an elaborate fake after a local man set up a branch of its bank complete with card readers, passbooks, and 3 teenage girls at the teller counter. This is out of the Financial Times. I couldn't believe it, but it looks to be true. The convincing looking, quote, ghost bank near the city of Linyi joined some of China's more impressive scams. And basically, these people kept dumping their money in until, and it goes into the story below, but until somebody caught on. It lasted a whole month, in fact, of individuals just bringing their money to the bank and not knowing any better. Now, the reason I mention this is obviously it's interesting to read, but we're talking about the fakes here. What exactly is fake nowadays when the entire monetary system is built on fiat? So let's begin looking at what I wrote about in my book. And we see this, what I'm quoting here is Infectious Greed, one of the best books I've ever read. It's by Frank Partnoy, talking about throughout the 80s and the 90s and so on, how we had financial instruments, let's call them assets or investments, and they decided that these would be an excellent way to make money off of very little amounts of assets, or in some cases, not having an asset at all. And I'm talking about the derivatives in this case in particular. You know, I have to do a video soon about derivatives again. I've done it before. It's in my e-course, but that's just something that just never gets covered because it's just swept under the rug. It's not something that makes front page news, so a lot of people don't cover it, but I surely do. Frank Partnoy states that this whole gambling scheme that they have running got to the point where the traders at Enron were even creating financial instruments to gamble on the weather. And you could type that in, weather derivatives, into your search engine, and you will get actual derivatives that they trade on today that are based on the weather. There can be no other word to describe this than gambling. Let's move on here. As we look at more things, I'll just jump through these quickly. We're looking at the high grade, high yield, fixed income, and equity fund, all the different flows showing you in the negative territory at this time. Of course, it could definitely reverse, but we're seeing a trend here that everything is basically declining back down to where it was during the financial crisis. I'll show you another example of that right here. Just a widespread case of the hiccups. Daily absolute price moves expressed as multiple of 1 year standard deviation. You can see these different charts. They all look a little bit different here, but essentially we're heading into a negative territory. Many different assets, and that includes stock markets, that includes commodities. But here's just one more. As we look at this now, biggest since the financial crisis. How many times do I have to talk about this? This happens to be the HG spread per point of equity volume. It doesn't matter. All the statistics are heading backwards. In this case, you see it going up, but that means basically that we are heading towards, once again, financial crisis territory. Doesn't matter what it happens to be. It seems to be pretty much everything at this time. This happens to be another one where we're looking at revenue growth, and that doesn't surprise me in the least, as we see, different charts showing you the same thing. But revenue growth, corporations are not making the kind of money they were before. If you look at the way they manipulate that and they push their stock prices up simply by engaging in stock buybacks. When you have free money being handed to you, when you have fewer and fewer places to put your money, certain stocks and find themselves to basically be profiting off of that. But that's at the last leg. That's at the very end of the bull market, of any bull market. In fact, you can just see that it's all documented how in the previous bubble that we had, you see that tech stocks were about the last sector to really start feeling a little bit of that squeeze, and then everything came down after that. So it's just a matter of time before we see this taking place within every sector. Certain sectors are hurting, and in fact most sectors are hurting. The only thing that's going up is a few select stocks in each sector, and this is what happens. They prop them up either through the stock buyback programs or through the incentive programs, things that I've covered here before on the channel. If you found this video informative, please give me a thumbs up. I try to get you as many videos as I possibly can, but I only do so when I have some good, solid information, so I hope you do appreciate that. I'm here to make sure that you get quality, but also the large amounts of quantity within a particular video, so I hope you do appreciate it. If you do, give me a thumbs up. That's the way you can support me. People asking me all the time, how can I support you? How can I support you? Just give me a comment, give me a thumbs up, and be a subscriber. If you do those things, you're doing me a huge favor, doing Liberty a huge favor. The truth is out there. I'm trying to bring it out there and get it out to as many people as I possibly can. Last but not least, if you found this video informative, I know you'll find my book, The Money GPS, even more informative. There's actually this look inside feature at Amazon where you can flip through the book and see if you like it for yourself. Take care.